This morning on BRN, a bill to cap credit card interest rates at 10%. Joining me now to help break it all down, Ted Rossman is with Bankrate. Ted, sorry to bring you back on such a short turnaround, but it's great to see you again this morning.
My pleasure. Good to be here.
I wanted to reach out to you and Bankrate because in our last conversation, we talked about the growing credit card debt. And here we have a bill and growing credit card debt, but also the high APR, annual percentage rate. Now we have a bill coming out of the Senate with Senators Bernie Sanders and Josh Hawley of Missouri. Sanders is from Vermont. I want to get your reaction to this bill capping that APR.
This is something that President Trump talked about on the campaign trail. A 10% cap would be really restrictive. The average credit card right now charges 20.13%. And I know that it sounds great if you're dealing with credit card debt. Wouldn't it be great to have a single digit interest rate? The problem is that there would be major unintended consequences to this. I really believe that access to credit would dry up, rewards would vanish. This cap, in my view, is just too restrictive. Banks would point out that they couldn't be profitable if they could only lend at a maximum of 10% APR. Credit card debt is unsecured. Right now, the delinquency rate's at its highest point since 2011. The percentage only making minimum payments is at its highest point since 2012. It's not like a mortgage or a car loan that's secured by an underlying asset. Banks worry that people aren't going to pay them back, and that's why they charge higher rates.
Okay, so going to that last point, the thesis behind the higher rate is that it's unsecured debt, and because it's unsecured debt, that they charge a higher rate for it, and they do it for anyone. So if Jeff Snyder made $1 million a year, but he had unsecured debt, he still would pay 21% because of the unsecured debt.
Yeah, the average credit card rate is about 20%. So we get that by averaging the midpoint of the range on more than 100 popular cards from the 50 largest issuers. A lot of times you see a range, maybe it's 15 to 25%, depending on credit. Sometimes it's higher. People with low credit scores are paying up to about 36%. There is no federal standard right now on credit card rates. The Military Lending Act caps at 36% for members of the military. Most people are not beholden to that, but that's kind of become an unofficial ceiling for all cards. You think about subprime cards and store cards that tend to charge the highest rates. They often top out at 36 or 35.99. Federally chartered credit unions have an 18% cap by law. All of this goes to show, though, that a 10% cap would be really low. I think there could be seismic changes to the way people use credit, because let's face it, I don't want you to pay 20 or 30% on a credit card, but sometimes credit serves a valuable position. Maybe you need a new set of tires and you don't have the money, or your fridge dies. Not that it's always the best idea financially to use a credit card as an emergency fund, but it is there when people need it. And what's the alternative? Do people go to payday loans? Do they have to go without? These are some of the things I worry about.
Yeah, and it's strange bedfellows here, and Bernie Sanders has a different point of view, I should say, than Josh Hawley. I don't want to wade into the politics, but strange bedfellows. But both recognize there is a potential need for change. I would think that capping at 10% is going to get a lot of pushback from banks and the credit unions we were talking about.
Yes, tremendous pushback from the financial industry. I don't think this is going to pass in its current form, but I think it's notable that the discussion is happening. And you're right about the strange bedfellows. I mean, how often do Sanders and Trump agree upon things? How often do Sanders and Hawley agree upon things? We've seen this in other areas too, like credit card interchange. That's the fee that merchants pay every time someone uses their card, and it averages about 2.2%. And there's been a bipartisan effort in Congress the past couple of years to lower those fees as well. And I feel like that's been gaining momentum. There was a hearing late last year where I feel like we saw the most agreement that I've seen in the past couple of years on this. And that was something that Senator Hawley was involved in, but also a lot of liberal Democrats, like, for example, Dick Durbin. This is really his brainchild. And Kelly from Vermont. So, we definitely see a growing viewpoint that rates are too high. And it's kind of caught up in this populism on both sides of the aisle. I think the financial industry would be wise to give some concessions. I don't think they're going to cave on the 10% cap, but whether it's the fees that merchants pay or the fees that consumers pay, It's not quite to the level of Occupy Wall Street some years back, but it does
Yeah.
feel like there's a groundswell of anger here, some of it rooted in inflation and high interest rates. And I feel like the financial industry is under some scrutiny and they might have to give something up.
Yeah, I think, look, I'm from the financial services industry. That's where I spent 30 years of my career. I think it's deserved in some ways. But I also don't want to throw them under the bus because they bring a lot of value. I mean, you got to be able to lend money to people and create capital for businesses, et cetera, like that. In terms of like next steps, so, you got this bill offered up in the Senate. I guess it gets discussed, they vote on it, but then the House of Representatives, right? If you remember back to I'm just a bill, I'm only a bill, and I'm, the Schoolhouse Rock, there needs to be something coming out of the House of Representatives too, right?
These things take time. It may not move forward at all. A few years ago, Sanders and Representative Ocasio-Cortez proposed a 15% cap. Last year, Senator Hawley proposed an 18% cap. Those didn't go anywhere. So there is some legalese about committee, and this may not come up for a vote. It is interesting, like I said, that the conversations are taking place, but just because this is proposed doesn't mean that it's going to pass or even that it's going to come to a vote. Sometimes there's gridlock on a lot of issues in Washington, and I don't get the sense that this is top priority. The fear among the financial industry, actually among that Credit Card Competition Act, was that it might get tacked on to something else. Sometimes that's how the sausage gets made with these things, that it gets tacked on as a rider to a defense bill or a farm bill or something like that. That was actually how the Durbin Amendment, so that capped debit card interchange about 15 years ago, that got tacked on to Dodd-Frank. So, so that's some of the inside baseball of what sometimes happens with this. But it does feel like momentum is building, that members of both parties feel that a lot of these fees are too high.
They are, and I wonder if you did cap the fees, or cap the rate, if they just would create fees, like you squeeze a sausage or you squeeze the balloon, and another part kind of gets bigger, right? I mean, I'm bad with analogies, but you understand kind of where I'm going. And I wonder if they could assess a charge in a different way to make the money. Because as you said, these companies, these banks, credit card companies, all have certain profitability metrics that they need to hit. So how do you hit it? Well, you could charge a higher crediting rate, an interest rate, or maybe you could deduct fees in another place. So I think you're right that there are a lot of unintended consequences, is my point.
Some people say that fees are like whack-a-mole. One goes down, another one pops up.
True.
We've seen this movie before. When the Durbin Amendment capped debit card interchange, it became harder to get a free checking account. And ATM fees and overdraft fees went up. Debit card rewards largely went away. So these are some of the unintended consequences to monitor. Honestly, the best way to use a credit card is to pay in full and avoid interest. That's when cards really work for you. I know sometimes that's easier said than done, but at the end of the day, America has the most generous credit card rewards in the world. It's just so critical to be among the half who are paying in full. I wish that was 100% because it doesn't make sense to pay 20% to get 2 or 3% in cashback or airline miles. But if you are free from credit card debt, that's when cards can really work for you.
And do you think, Ted, to that point, do you think it's more education? Like, we need to spend, and I know your site, you in particular, but your site, you guys do a lot of education. There are a lot of different sites that do it as well to supplement. But I feel like if we just did a little bit more education around credit, as well as some other things, people would understand how to use this particular instrument and may use it differently. I'm not saying they would, because behavior is behavior, but it just seems like education is missing here.
You're right. I am a big proponent of financial literacy. I feel like it's often undertaught in schools. Now, to be fair, people often get into credit card debt for very practical reasons. Emergency expenses like medical bills and car repairs, or maybe it's just day-to-day living outpacing your paycheck and you're financing gas and groceries. And that's been all too common the past few years with high inflation. But I do fear that if credit dries up, which I think it would if there was a
Mhm.
10% cap, then what? Are people going without? Are they relying on even more expensive sources of credit, like payday loans? Are they looking at other alternatives? Are they borrowing
Loan
from family
sharks.
and
They go to a
friends?
loan shark.
Yeah, that's a really bad situation. I mean,
That's a
some
bad. I
payday
mean,
loans have
they
APRs
charge
like
like,
200%.
yeah, I'm going to say they charge. I mean, I'm being serious. I mean, those people, not only will they break your knees, but they'll also charge you a very high rate of interest. Sorry to interrupt you, Ted.
No, that's fine. Yeah, I just think that's one of the unintended consequences here is, again, not that we want people paying high interest rates, but what is the alternative? I mean, we have a backdrop here where half of Americans or half of credit card holders carry debt from month to month. Only about 4 in 10 Americans have $1,000 saved for an emergency. I would love to see progress on these issues, but I do think it's relevant that for a lot of people, if they have an unexpected medical bill or car repair or home repair, that's going on the credit card. And if that dries up, I just worry what happens.
Yeah, and Ted, lastly, I wanted to ask you about the unbanked because you said, I don't know, half of Americans, some percentage of Americans have credit cards, some don't. They use alternative means. There are a lot of Americans who are quote unquote unbanked, meaning they do not have a bank account, and it's in certain areas of the population. That also is a big deal here.
Right. Well, that touches on other alternatives like prepaid cards, which can often have high fees, buy now, pay later, which sometimes works for people, but sometimes has very high interest rates. I mean, it's not just for interest-free payments over 6 weeks anymore. A lot of these BNPL plans from Affirm and Afterpay and others, they're lasting longer and they're charging higher interest rates, sometimes all the way up to about 36%. So they are behaving more credit card-like over time. I don't know what would happen to them if a credit card cap came into play. But I feel like at the end of the day, financial organizations are going to try to protect their interests, and consumers do need access to credit. So that's the biggest worry is if that becomes harder to get.
Yeah, and look, the financial services industry, they can afford the lobbyists that help craft and do the carve outs in the legislation. It'll be interesting to watch this one. And again, strange, it's from my point of view, strange political bedfellows, but good to see both sides kind of represented. So maybe this one has legs, maybe it'll die out. We'll see if it winds its way through the Senate and then ultimately the House. Ted, always great to see you. Thanks for popping on again so quickly. And we look forward to having you back on the program again very soon.
My pleasure. Thanks for having me.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details, of course, at our website. And your subscription supports all of this great BRN content. And we're back again tomorrow for another edition of BRN. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.